Welcome to TradeTheMBI.com. This is John. This report is for the 16th of April. Everyone survived tax day, hopefully well. But here, hit the 50% mark, unable to do anything, and that was that Magenta getting into a peak. It really needed to, have a push to go through that. But the fact that it's at this particular point breaking down, you've had some news from NVIDIA and that where the U.S. has blocked chip sales to China for certain types, and then you had the change of valuation for the yuan devaluation, which is causing some stir. But from our standpoint, it was always this question of here getting the shakeout to move back to positive. Without that, you were always going to be in a world of hurt coming up against a significant resistance point. And we're looking at potential spider. But you see, this gets back to that whole discussion of not having a complete reset of the steel. And you can see this goes all the way back to the beginning of this breakdown. It began in the early part when we reached the peak here in the beginning of February, and by later February, no relief in sight. And then we finally got one brief dip that reset partially, but it wasn't enough to hold everything in place because you just popped right back above. And the same thing just occurred right as we had the big push. And once it tips back down, you get the same kind of effect. It's easier to see it from an MBI reading. In this case, you had the shorts being forced to cover, but now you don't really have all that much excitement from a buy side. And from an NQ, it's even more acute. You can see that if that ends up for the day with the shakeout lower, then you can expect that we're going to be heading towards that 23%. And again, it becomes important where we end up with the magenta in relation to yellow. That could be your what you might call saving grace when you get to the 23%. If magenta is still rising above there, but a magenta break below yellow, and then you're definitely in trouble. You're looking for a move to the zero easily. And not a surprise, you get this back and forth. China's been selling U.S. treasuries, and that caused a big reduction in yield, which is actually beneficial to people from a broader standpoint. Makes a lot of the credit options that they have cheaper, which is a bonus. But it also helps reduce the inflationary pressures as far as where the spending goes, what free dollars remain. You then look at oil. Dream scenario, from at least from a Trump standpoint, and then would be to have oil break down into the bottom part of the 50s, really putting pressure on price, but alleviating a lot of the strain of tariff, because even if you paid extra for some goods that you still want to get, you'd have far cheaper energy costs, and that is a huge savings. Every dollar you're not spending in gas or supporting energy ripples through the economy in a broad fashion, and it makes a huge difference. Of course, they see this as somehow a positive from the euro, that the U.S. is sort of preparing to implode, and that's what this buildup is all about. Plus you're having a lot of euros being repatriated now simply because they think that there's instability in the U.S., but we've already seen from like LVHM and their reporting in that far weaker in even the luxury brand models from a consumer standpoint. So what is that indication? Well, that's an indication they're not doing well in China, so why is that the case? But that's a whole separate issue. From a gold standpoint, everyone wants to get into gold now because, hey, that's at least a safety spot from devaluations that are going to be taking place and deficit spendings that are expected because of all this global turmoil that's supposed to happen. Obviously, for China, they reported pretty solid GDP numbers. However, they still devalued their currency overnight slightly, and probably going to have to continue to do the same, even though they claim that the U.S. doesn't represent much as far as their trading partner. $1 trillion, that's a big deal. We'll see how that plays out. It's not going to quite work out. So, can you go to Bitcoin? No, because it's been trading, relatively identical to what the Nasdaq is doing. So you're not getting the support there. It's great for parking your money in between, but that's a pretty weak case right now. And a slight dip would result in even further sell within it. So we'll see how that plays out. But from the standpoint of everyone jumping into crypto, and that not the case, and this is just a clear indication of that transition from what everyone thought was going to be 10 million Bitcoin to, well, not so fast. take a break there. So earlier we'd had the spike of MBI white. We talked about this. As long as magenta was holding up, you'd be okay. But then you ended up with another MBI white spike just as magenta was starting to break down below the 33. So then it was just a question of when does it break below the 25. It made a brief spot there, but then the secondary one started at the same time MBI white started to move up, and that was your cue. And sure enough, we've reached the 50%, and you've reached 50% where still no turnaround from MBI readings, and certainly shakeout. Now, shakeout's getting into a minus 22. That usually creates a rebound, but now the rebound is going to be back up to the 50% resistance. So that's problematic from that standpoint. And you can still see from an extreme histogram standpoint, there's still selling within that. So not done by a long shot. We had this single positive extreme, but that wasn't relevant. That had been filled a long time ago. So nothing from that standpoint that has to be targeted. So this is just plain old panic sell. Not even panic. It was just normal selling. Up range back into the middle zone of it. Typically, this is where institutionals would want to get a little bit interested in that, but I don't think you're seeing that appetite yet at this particular stage. When we look at it from an intraday, everything was fine overall from a really tight time frame 5-minute chart here. All we did was fill back the run up that took place right at the pre-market stage, and it's pretty much where we stayed for the day. All the action has been taking place here in the European session, where you can see the effect of what's taking place for Nvidia and that, and you can still see they're trying to make some bounces in there, but overall weakness. I think this is going to continue. The odd thing is that for now, the weaker dollar is really just trying to neutralize the effect of tariffs to other countries. I don't know how long that's going to be sustainable, given the fact that they're not in any better position to support a narrative that goes beyond deficit spending. And the longer it takes for them to come to an agreement on a variety of these different things is going to be interesting, because that's where it's going to start to really have an impact. And you're probably going to see Trump phase in different tariffs along the way, just so that it's not completely blanket. But the fear has been set. So these countries all know they're going to have to react to it, and that's what they don't like. And the market's reflecting their displeasure for having to deal with any level of uncertainty. That's fine. But overall, we'll start to see the effects of this, probably not for a few more months, at least from a domestic standpoint, and it'll probably be irregular based on states in that have much more dynamic and fewer regulations, and so that's where you'll begin to see the changes. So we'll start to watch that as time moves forward. As always, though, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.